So there is a pretty epic time in the market. So first off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we are seeing some market deterioration. It is very important to, consider how this developed. So what we saw, frankly, a while back. And that is the initial breakdown in some of the high beta themes, like many of which are here in the megatrends. So that's when it started. And then we saw that, the small caps, tech more broadly started to break down. So that is, how some of the, the more substantial corrections, they begin. So you can compare it to, a ship sinking. Initially, the most vulnerable part of the ship goes under, and then, towards the end, you do have this smaller and smaller part of the ship where you can stand without getting into trouble. Okay, so let's now look at communication services. And we will look at global communication services. So the reason why it's interesting is because when we look here at, the various sectors, so let's actually sort of get the big picture. So when it comes to basic materials, we do see overall it's looking okay, but there's been some meaningful pullbacks, but nothing dramatic. When we go here to consumer cyclicals, all of a sudden we do see, some industries where there are some, very red numbers. And that's, where we have seen the ship taking in water quite significantly. We go over to financial services. Still, quite a few of them are holding up, but we do see that, like the gig economy as an example, online lending and digital banking, pretty deep underwater. Real estate still holding up, but we are seeing some deterioration there. Consumer defensive, massive hit here in the education space. Healthcare, you do see that there is weakness. Utilities holding up strong, which is not a good sign. You, in a very, in a market where there's a high level of, faith in future higher equity prices, you do not tend to see utilities outperform. And here we have communication services, energy. You see here that, the green revolution stocks that went, hyperbolic. You had a lot of bubbles here. Look at what happens. And this is why it is very important to stay to them, to this, to, the rule of buying low and selling high. Because these things, they happen, they keep happening. Then we go here to industrials. We see like 3D printing, major haircut, even though it was extremely strong, not that far back. But we had a parabolic pattern, and they rarely work long term. Technology, a bunch of very red numbers, and these were, the leaders, and now they are deep in the red. Which, begs the question. Given that global communication services is holding up pretty well, is that one next in line? So that is what we are going to figure out now. So we go here to IXP, Global Communication Services ETF, iShares, and I have drawn in these time cycles. They have been relatively consistent over a long period of time. See here, look at price and then you look at the time cycles. Good calls here. Doesn't nail the low here, it does nail the low. Given the time cycle, let's move it. Okay, so the time cycles have been relatively good at calling, projecting future developments. Not perfect by any stretch of the imagination, but pretty decent. So the time cycle suggests that we should expect a declining phase. We are technically supposed to have it already, but the uptrend has been very, 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 very strong. The previous cycle here, you see that the decline happened relatively late. And then it, obviously, it went down pretty fast. So the low here of the time cycle is the beginning of August. If we look here at the seasonality for IXP, you see here that May, the current month, is the weakest. So it closes lower 55% of the time. Nothing dramatic, but there's a tendency for May to be weak. Even though June tends to close higher 63% of the time, you see here that the average gain is literally at 0. So May and June are mediocre. July tends to be stronger. But the problem for July is that August and September tend to post minor losses. So when you look here at both the percentage of time when it closes higher and also the percentage gain, then October, November, December, April, July, March, that's the classically more strong months. So basically the time cycle and the seasonality, they corroborate each other and they tell us a message that this current setup is risky for the bulls. When we look here at the PPO, we haven't been this far away from the 200-week moving average in red since before the housing bubble popped. You could further make a relatively strong case that we do have potentially, a double top pattern, a major double top. It is, of course, fully possible that we will have a breakout. That can, of course, happen. Though that is more likely to happen when you have data corroborating that directional thesis. So far we do have price going up, and still price here on the daily data point is strong. There's leadership here in communication services. The issue is the seasonality and the time cycles so far, and we are very overextended on overbought indicators on the weeklies, and here on the dailies, the PPO is very excessive. And the RSI has cooled down a bit, but you see that historically there's a strong tendency for us to test the low end of RSI, and it's a very long time since we have done that. If we go here to Finviz, we were rejected from the upper end of the trend line. When we compare the IXP to the S&P 500, and we go here to performance, we can look at the price earnings ratios. We do see here that IXP is slightly higher when it comes to the price earnings, around 4% higher, so nothing really dramatic. Looking here at the gains, it's a bit of a mixed message, though they are relatively close as far as performance goes. If we go here to the holdings, here are the top holdings, and we do see some interesting similarities between IXP and SPI. And when it comes to this being, a communication services ETF, you do have some, more, peculiar additions. You have Netflix, Walt Disney. You could, of course, argue, and Activision Blizzard, you could argue that they are communication services, but it's also a very different kind of communication services. I mean, many would argue that those, as an example, would be a clear example of discretionary stocks. When we go here to the sector breakdown, then you see that tech communication pretty high here on the IXP, no big shock there. But you see here that, it's not as pure play as you might think. Yeah, the sector breakdown on the S&P is pretty well diversified. But that is, of course, to be expected. Market cap very dominated by large caps here in the IXP. Very similar to the S&P 500. And the region breakdown is very skewed to America. So to sum up my take here on the IXP, I think that given the data we have looked at, and given how far it has gone to the upside, I think that there's currently more reasons to consider bearish opportunities on the horizon than bullish.